Alright, so today I'm here with Seah. So some of you might have seen him in National Achievers Congress on Success Resources stage before. He's one of the top value investors in Singapore, and he has a business, a training business in 23 over countries, public listed, right? And he's a super humble guy. Like just from him speaking to you, you will be able to tell just from the vibe and that kind of stuff, right? So today I was gonna meet him, so I thought, hey, maybe we can share anything that we know about investing or business or sales, anything that we can provide to you of value, right? And Sean, maybe you can explain a little bit about yourself, like how you started with investing and
Sure. Thanks for having me here as well. Well, I was actually sharing that investing isn't something that's very natural. I didn't grow up thinking that one day I want to be an investor.
Yeah.
Actually, I wanted to be a soldier. I wanted to be an astronaut.
Okay.
Not really, just a soldier.
Okay.
And it was actually one day after my graduation, before I graduated in university, my professor actually told me not to invest because based on statistics, most people can't make money from the stock market. It's a real statistics. So I was very close-minded to investing. But one day, enough was enough because I was in the military at that point in time. 2 a.m. I remember. I was driving home. I was listening to an audio. Rather, I was listening to a radio. There was a report saying how a lot of Japanese men, they retire very young at the age of 40 because they work hard. But because they spend so much time working, right, they are alienated by their families. Meaning to say, at 40 when they retire, they wanted to spend time with their family members, but their family members look at them as if they were an alien. Like, this guy was never in my life for 20 years and now you want to be close to me. So I was looking at my watch, it's 2 a.m, I'm driving home, it sounds like the track I'm going towards. So I decided I have to do something, and the next moment I searched online how to make money online and things like that. I found investing and I say, I have to give it a try. And that's how it started.
It's amazing. I always believe, right, that life throws like sand at you. Okay, like when you don't wake up, right, life will throw sand at you, right, to wake you up. You know, like if you're on the wrong track or what, life will throw sand at you. Then if you don't wake up, right, life will start throwing like pebbles at you.
Right.
If you don't wake up, they'll start throwing like stones at you to say wake up.
Right.
And then eventually rocks and boulders. And by the time, for example, like some people, they don't take care of their health, right?
Right.
So they felt, my heart a bit not right already, or they start developing like heart disease or diabetes, whatever. But by the time they realize it's too late already. But for him, just from a
just a sand, right? Fortunately, it's just a sand, and I realized, I guess what you're saying is right.
Like,
whether you ignore the science.
Okay.
Right.
So after that, you decided to go into investing.
I decided to explore. And that's where I met a friend who showed me that it was possible, because I was still very close-minded. I think if you remember people of authority, like it may be your parents or a teacher that you respect a lot, if they tell you something, it sticks in your head. So I still cannot forget that my professor said most people will lose in the stock market. Although I was a little bit more open-minded.
It's just like how they say most people will lose in entrepreneurship, right? But it depends on who is the one running the business.
Exactly. Right? I don't know the statistics. Is it like out of 10 businesses,
9 fail, that kind
9 fail, right? In the first 5 years.
Yeah.
And another 9 fail the next 5 years, right?
Yeah, correct.
So that time, although I was open, but I was still a bit skeptical until a friend, he showed me his investment results, and he was much younger than me. I think 20 years old, and he has $250,000 in his brokerage account, and he didn't come from a rich family. So I was very curious. I said, how do you make so much money? And he said that he made it from the stock market. And I told him what my professor said. I say, based on statistics, right, it's impossible.
Okay.
Because most people can never beat the market.
Okay.
And he told me that you're right, most people will never beat the market because most people never ever learn how to. If you are willing to learn, go through the proper steps, this is called investing. If you don't know anything and you try to invest, it's actually called gambling. So you say most people are gamblers. Yeah, that's where I really decided to learn.
So what? Okay, maybe you can explain a little bit about value investing. Like, what's the difference between value investing, forex investing, this kind of stuff?
Okay, maybe I just share what value investing is. Now, we all know what the stock market is. I guess most of us know. We know that Singtel is on the stock market, BreadTalk, McDonald's, Nike, Apple, Disney. Now, the issue with most people when they approach the stock market is they look at the prices every single day. So they say that, okay, Disney is $100 today. If I buy it today, I hope it goes up to 120, and if it does, I make money. If it drops, I lose money. Now, this is actually more of like a short-term trading.
Speculation.
There's nothing wrong to it. I know friends who make money.
Yeah,
it's just that it isn't really suitable for me because I decided somehow that I'm not a very lucky person. So if I go in with that perspective, right, I lose money. Whereas for value investing, you look at the stock as really an ownership of the business. When you pay $100 to buy a stock of Disney, it's like a title deed to Disney. Like you are buying a property, you buy a title deed to the property. And Disney, every day when they make money, certain portion of the money belongs to you. How do you really get the money? There are a few ways. One is through dividends. The most obvious, they pay their shareholders dividends. And if they don't pay, they keep the money in the business and they expand. The value of the business goes up, and that's where the stock price increases. So value investing is very fundamental. They call it fundamental analysis, right?
So how do you separate a legit company from a money game? Because there are so many money games out there, especially now with like Bitcoin. I wouldn't say Bitcoin is a money game, but I would say anything that involves money is a money game. Even CPF is a money game.
Yes.
Right. Like
CPF
insurance
is a money
game, right? like it's all a game. The whole system is a game, right?
Yes, correct.
So is it a sustainable money game or unsustainable money game, right?
Yes.
So how do you separate? Like how do you are there like eight tips? Like there are factors that in value investing, right?
Yes, correct. So I think Alaric actually points something very, very important. It's not so much of how do I make the best investment or make the most money, but how do I actually avoid losing money?
Okay.
Because Warren Buffett say that investment rule number 1 is to never lose money.
Yeah.
But
rule number 2, never forget rule number 1.
Yes. Correct. So don't forget to not lose money.
Yeah.
And you keep that in mind. Okay, so how do we avoid investment that helps you or rather loses money for you? Now, we can't really eliminate all the risks, but what we do as investors, we reduce the risk. And every time we reduce the risk, right, we have a higher chance of winning. So the first way to reduce the risk, right, is to find a company with long track records. Now, typically, if it's a money game or if it's a scam, right, they will not like take 10 years to scam you. They will take like maybe 1 year, half a year, 2 years, and they will hit and run. So if you see that a company is in the stock market, listed there for about 10 years, 20 years, and they are making consistent progress. So the key thing is consistent.
Okay.
That's where you know that very high chance if they have been making money for the past 10 years. And why do we say 10 years, right? Because every 10 years there's a market crash, there's a recession.
Correct.
We want to see whether they can perform in the recession. And we realize, like just now I mentioned Disney. Actually I gave quite a number of ideas. Okay, this you can take them down and watch them. These companies, if they have been making money for the past 10 years, you can almost guess for certain next 10 years they have a higher chance of making it. As compared to...
Correct. It's a trend. Yeah. It's like if they keep winning the basketball championship, this team higher chance to win the next basketball championship.
Exactly. If I ask you who will win the basketball Olympics, very likely it's going to be US now because they've been winning for the past, I think almost every Olympics. Correct. So you can almost be sure that they will win. But just like any sports or any business, right, there's no confirmed guarantee.
Yeah, definitely.
Yeah, the second way to reduce your risk is to buy them at a cheap price. Now, whenever you place money in the stock market, there's the amount of money that you can lose. For example, you place $1,000, you can lose up to $1,000. We don't use leverage. That's very important. Don't borrow money to invest.
But you don't use leverage?
I don't use leverage.
Even like if you own properties, you don't use leverage or.
Okay, I get what you're saying.
Yeah.
So you see, there are a few types of leverage. There are consumer interest rate kind of leverage where you have to pay more than 6-7% of interest, because once you, let's say when you borrow money on a margin account in the stock market, which is they allow you to borrow money.
Correct.
Once you place the money in, you have to start paying like 7%. Meaning to say your investment must make you more than 7% to break even.
Per year, per month?
Per year.
Okay.
Yeah. But they roll it every single day, so the actual interest rate may go up to maybe 10 or even 20% sometimes.
Okay.
And people do not know about this.
Okay.
So we when you talk about property investing, interesting that you mentioned this. In 2009, 2010, when the crash happened, me and my dad, we went over, we bought about 30 over properties in the US, and we did not use any leverage. But but I'm not super rich back then. I do have some savings. Every single house that we bought cost maybe about 10,000 or less. 10 to 20,000.
Okay.
It was how cheap back then, and now it's worth about 100 to 100,000.
10 times your
10 times more.
Okay,
Okay, you can see when you actually go in and buy a house for $10,000, there's your risk.
Yeah.
But if you buy it for $100,000, your 100,000 is the risk.
Yeah.
So you buy cheap, your risk reduces.
Wow, so you didn't use leverage at all, even when you bought the property?
I did not. I know if I use leverage, it would have been even better.
So okay, let's say someone is just starting out.
Yeah.
Let's say he's 18 years old, 19, 20, this kind of age, right?
Yep.
And he has not saved a single cent yet because he just.
That's terrible.
That's terrible. Okay.
No.
How can you get started? Should we start investing with $100 a month first or something? Or
I get what you're saying.
Yeah.
Yep. I think you should start investing. $100 a month is a good amount to start with. Of course, for seasoned investors listening to this, you'll say $100 is nonsense, because once you put $100 into the stock market, you have to pay for brokerage fee, which costs you maybe $10.
Yeah.
That's 10% off. How are you going to make it back?
STI?
Yeah.
1%.
Oh yeah, STI if you use the
ETF.
POSB automatic fund.
Yeah.
I prefer starting investors not to do that, especially if you only got 100. Don't do that. Okay, why?
Why?
Because I feel that $100 that you put in is not so much to get you rich, but to get you experience.
Yeah.
So if you want to be a seasoned investor, put that money in to get you experience. And if you put into STI automatic investing, you can't gain much experience.
Understand.
However, if you can afford it in the later stage, you can start to do automatic investing. I have my thoughts about STI index investing. It is
Maybe
very safe. It's very safe.
Because I invest in STI as well, but maybe you can share.
Okay, good news. Okay, the good news is right. It can at least beat inflation.
Yeah.
Okay, why? Because they are the one who cause inflation. If you look at Singtel is inside there, like DBS, all the big companies, they are the one who increases price. In the market, and that's where you get hit by inflation. But they get more money from you, and you become a shareholder. You make it back to them. However, the story that is told to most people is STI has been going up by 7 to 8% per year.
Correct.
Don't forget, it was during the phase where Singapore is in a growth stage.
Okay.
If you expect Singapore's GDP to continue to grow by 7 to 8%, may not be so feasible now. Is it still a safe investment? I think it's yes.
S&P 500.
Yes.
It's still about 8%.
S&P 500 is different. Okay, you must understand, when you invest into the index of a country, you are investing into the growth of the country.
Okay.
So by the way, I love Singapore. Okay, I say my pledge every day.
Yeah.
I don't do that. I don't do that.
Okay.
But I love my country. It's just that as an investor, would I rather invest into the economic growth? I mean, the economic growth of Singapore, or into, let's say, China or into US? I feel that Singapore may not have so much growth potential, and I think even our government is
especially now with the China stuff, the tariffs and
I want to confess, I actually invest more into China than into Singapore.
Okay.
for very simple reason. For very simple reason,
you invest in
myself,
companies there, or you invest in a
I invest
fund,
into the China index.
In a China index.
I love it. Okay. So
can I do that from how can I do that?
Just open a brokerage account, and there are number of China index. The one that I actually look at is ticker symbol is FXI. It's a S&P. It's a S&P for China. So they have the biggest Chinese company like Tencent Holdings, Alibaba, all the famous ones.
Correct.
For simple reason. Okay, so I buy into FXI. Why do I do that? Because I ask myself, will China be much bigger than they are today, 3 or 5 years later?
Will, definitely.
Almost everybody knows that they will, right? It's just what happens along the way. We do not know.
Yeah.
But as compared to Singapore, would it be like 2 times bigger? I think it's very difficult. It's very difficult for us. I wish we will be able to do that, but as an investor, unfortunately, I think that China has a higher chance.
Understand.
Even US has a higher chance.
My take on wealth creation or that, right? I have a slightly different take. Okay, for me, right, I believe in this thing called wealth triangle. Means there are 3 parts of wealth. First, you must have a high income skill.
Okay.
Then you have a scalable business.
Okay.
Then you have a investment.
Okay.
Right. So, I don't believe in I believe, right, at the start of a career, right, the best investment to make will be in yourself.
Okay.
Meaning, okay, for example, let's say if I spend $3,000 on a seminar, okay, but because of this seminar, I make $1,000 more every month. There is no investment in the world, right? Like, there's no investment right now that can give you this kind of returns.
Totally agree.
You get me? You spend $3,000 on a seminar, but you make $12,000 more a year.
Totally agree.
There's the best investment that gives you the highest ROI at that point of time will be investing in yourself.
Warren Buffett said the same thing.
Yeah, because you can, your income making potential becomes higher. And what do I mean by high income skill? I didn't mean a high income job. I mean a high income skill. So a high income skill could be coaching, could be speaking, could be marketing, could be playing poker. That's also a high income. If you are very good at poker and you can always make money from poker,
which I highly don't recommend.
And beat the rate or whatever, that can be a high income skill.
Yep.
So I believe in having a high income skill and investing money in a high income skill, and then building a scalable business. So from having the high income skill, you have a scalable business. Because your high income skill will be able to support your scalable business. Whatever happens to the business, your high income skill can still support that. And then from that money that you make, you can do an investing. Because the only thing that's really passive income, right? Like compared to, like a lot of people say like, oh, MLM is a passive business, you know.
Do you think it is?
I don't think so. Not at
Okay.
all. I've done network marketing. I've built a team of 140 people, but I realized that no, that it's a lie. They say what time freedom, money freedom. No, there's time flexibility and financial flexibility, but there's no financial freedom from MLM. Like I've talked to the top leaders, you know, top leaders in WeWay, Newskin. I asked them, if you stop working right now, right, do you think your income will still remain the same? You
Yes.
say it will drop by at least 5 times, right? So that means
5 times, wow.
Yeah, 5 times means yeah. So it goes to show that you still have to manage the business and all that. So it's not a passive income. Then people talk about online business. I have online businesses as well.
How do you do?
Okay, for me, I have partners to run the business, right?
Okay.
So I still will get a passive income, means even though I don't manage the business much, like Sarah manages Blush Boss, so I still get a passive income from that. But if Sarah doesn't manage Blush Boss, can Blush Boss still make an income? Not possible.
That's right. That's
so
right.
even online businesses are not passive. But if you invest in a business, like you invest in value investing or what, I think that's the only like really passive income.
Right.
Using money to make money.
It's interesting. What Alaric mentioned. Okay, then I just share a bit
Yeah.
about my experience in
Correct.
property investing, because I told
Yeah.
you I went to US
Yeah.
and I bought quite a lot of them. They were not really totally passive, you know, because
Ah.
I mean, based on your question about if I really stop right now, what will happen? I realized there's a lot of managing to do.
Yeah.
Up to a point in time, I
But you
was
can hire
quite,
a property management
yes,
company.
I was actually quite frustrated with all the paperwork and things. I hired a property manager to manage all the property. So now when I actually manage or hire a property manager and do that, right, it really becomes like a investment. So I was thinking, when I actually invest into a company like I mentioned, like Disney or like BreadTalk or Singtel, right? Same thing, you know, you're actually paying money into this company and for the managers to manage the company. So someone else is doing the job, when you talk
Correct,
about
correct,
totally
correct.
passive.
Correct.
Yep, you're exactly correct. And I totally agree with what you say. You must first invest in yourself,
Yeah.
because
Like books,
Yeah.
success audios, videos. There's so
Exactly.
much free content out there. You must capitalize. Now it's the internet of the world is changing so fast,
Podcast,
right?
yeah.
Like marketing, right? Last time used to be vertical, like
Vertical, okay.
vertical marketing means like all the companies, you know, they it's very vertical.
Okay.
Right now it's very horizontal, whereas the consumers get the power. There's so many reviews out there.
Oh,
you know,
yes,
like
yes,
the
that's right.
power goes back to the consumer. Last time, whoever has the money to advertise, those are the people who become richer and richer. Whereas, because it's not so connected, the world is not as connected, right?
Right.
Last time it was very individual. Now it's very social.
Right.
So last time, marketing, right, used to be very one-to-one.
Right.
Like I'm marketing to you. Even I launch a newspaper ad, it's like I'm not marketing to one person.
Okay, it's one way, is it?
Correct.
Yeah, that's right.
It's one way, right? Whereas now marketing becomes very social. It becomes a relationship. Marketing becomes a relationship.
That's true, that's
Right.
true.
So like the world is changing so fast. So we have to evolve, and it's so easy to learn new things nowadays.
That's right,
With
that's right.
the internet and
With YouTube, with
Yeah.
podcasts, my
Yeah.
favorite.
yeah, podcast. Which podcast you listen?
I have this cast box, and let me check. Okay, it looks like this. Okay, I love it, especially when I jog and things like that. Okay, it looks like this. Can you see this cast box? Okay,
Yeah.
yeah. So it's a CASTBOX, and I just shared with you one of my favorite podcast channel. It's called Masters of Skills, and the person who actually created this, right? Oops. Is actually the founder of LinkedIn.
Master of skill.
Yeah, Master of Skills. And he interviewed people like Mark Zuckerberg, Bill Gates, a lot of people, and he cuts them into very, very crisp ideas. This is for even like even people who created Airbnb. So we love that. Yeah.
So, are there any skills that you picked up from investing that when you applied to your business, right? That help you when you apply in your business. For example, maybe
Yep.
investing is like marketing has skill sets of investing. Marketing is like you put $1 in, you get $3 out. You're buying customers.
That's
that
right.
kind of thing. So are there any things that you have learned from investing that when it translates into
I get what you're saying. Okay, so in our investment checklist, right, there's
Yeah.
one portion we talk about this thing called economic mode. So what's so special about you? And there are a few categories of economic mode, or they call it unique selling proposition,
Yeah,
right?
yeah, USP.
And from there you can actually do a scale on like how good are you in each of them. The first one is intangible assets, like how do you, like branding is one of them. Like
Correct.
do people think of you, the first thing they think of certain things. That's where we think about, because like the business I'm running is a value investing college.
Yeah.
So we are thinking, do we have an economic mode in all of this? And I want to be very honest about it. I don't think we are anywhere near a place where I can say that we are like unbeatable. Although we are growing very fast, we must ask ourselves, how can we constantly really continue to sustain? So do we have branding? The second one is, do we have a network effect? Okay, network effect is something like referral is one of them. But more importantly, the idea of network effect, it is a very interesting idea. Meaning to say, what actually motivates people to refer your business?
Okay.
There are few things, but network effect, right, plays with this idea that if I refer my friend to join this business, it actually benefits me. Now, network marketing is one thing that you talk about. That one is monetary benefit.
Correct.
But for example, for Facebook or for, let's say, you talk about eBay or things like that, right? Now, if let's say only two of us are on the business, then it's like every time I post something, I hope that he likes my post. But when more people join, it becomes more powerful to me.
Correct.
That's why I want to refer people to join.
It's like PayPal. Like
exactly.
if I can only if only 2 people use PayPal, they can only transfer money to each other.
That's right.
But if 1 million people use PayPal, they can transfer money. So the platform becomes more powerful as a whole. Okay.
That's right. Branding, network effect. One more thing that's quite interesting is switching costs. How do you make it painful? Okay, this sounds quite horrible. How do you make it painful for your customers if they want to switch from your business to someone else?
So how do you do it for yourself?
Okay, for ourselves, right? For ourselves, now in our community, in my platform, right, where people learn to invest, we have a very strong community. In fact, I think there's initially when people join our program, they may not understand this because they come in to learn investing, and we teach them very specialized skills on how to make money from the stock market in a passive way. Now the thing is this, investing like sports, right, is not a one-time thing like, okay, I put in $1,000, I become rich the next day.
Same thing for marketing, same thing for business. Everything is like that.
Everything is like that, right?
It's a sport,
The follow-up is very important. Like a sport itself, it is much more difficult when you play it alone.
Correct.
But when you have a team, it becomes much stronger.
Yeah.
So I'll say that my community or my causes is very, very powerful because the follow-up support is very, very strong. Whenever they post something on Facebook, right, I can tell you, before I can answer any of the questions, there may be like 15 comments already. They already tell them my experience is this. So
like
the community
Facebook group,
becomes very, very powerful. Yes.
He has about 10,000 students.
Yeah.
And a lot of proven success stories.
Oh, thanks.
Yeah.
Thanks for the free
free
advertising.
publicity. I'm a marketer, so that's what I do.
It wasn't planned though.
So cool. Okay, where were we?
You're talking about what I learned in investing, right? So I think, right, same thing, because you see, when you're investing, right, you are commenting on someone's business, saying that I think your business is good, I think it's not good,
and I'm voting with my money.
I'm voting with my money. Now it's easy to sit back and comment, to make comments about, oh, this guy is good, not good, this guy sings lousily. But when you actually take that lens back onto yourself and judge yourself, right, it becomes quite easy. Or rather easier to form an opinion of yourself, because we have a checklist. We ask ourselves whether profits are consistent, is there debt, is there cash flow. We can use this back on myself.
Like normally you are the person who
now it's judge, right? Now I judge myself.
Now you're judging yourself. Okay, I see. So wow, okay, that's how the skill set. Yeah, I always believe that the skill set for success, right, is always it always applies to different things. For example, if I'm very good at basketball, right, the same principles of success, like determination, passion, this kind of stuff, is the same for golf, is the same for pool, is the same for the same success principles for business, is the same for marketing, is the same for sales, same for investing, etc.
It's always interlinked.
Cool. So what motivated you to, like, okay, from being an investor to being a entrepreneur, right? Is it like how's the experience like?
I was an accidental entrepreneur. I didn't really wanted to set up a business. But it was a very long story. But someone actually requested me to start this. I started this, and the person who requested actually disappeared. The promise to help didn't happen. Okay. But I decided that
So it's like an angel that just come in and then once you get started, it's a blessing in disguise kind of thing.
I would guess so. Okay, I didn't want to do a business. I was an investor. I was comfortable with the cash I was earning. So when there was a request to start this whole value investing college, I started with the person promising me that I don't need to handle the business portion, no need to do marketing, selling, nothing. I just come in and share my passion, which is really about how to invest safely. And the person didn't carry on with me after a while. I have to hold the whole thing. And I learned a lot along the way. So like what we mentioned just now, it's easy to comment on people's business, but when you do it yourself, when you're on the other side, it's not so easy. I begin to sweat and I have to take on a lot. I guess it's taking a lot of judgment, believing in your judgment and pushing for it, really staying through the course.
Grit.
Yeah.
Grit.
Yeah,
G-R-I-T.
That's
I think that's very, very important for
Very
any
important.
entrepreneur. And another thing very important for any entrepreneur is sales. Like I really observe
That's
all
true.
the like don't talk about those people who design apps and all that, right? We talk about those people who do very practical money, you know,
Right.
practical business, practical like traditional kind of business. Those people that can survive, don't have to say thrive, but just survive, are the people who can sell.
Yes.
And the people who, mainly these are the people who can sell, and the people who have the passion, right, such that when things get tough, right, they can still stick through. What was the lowest part of this business? Like, do you lose money before? Or,
In this business,
yeah. Like,
the
you know,
lowest
you ever
part.
reached a point where the bank account was just, you cannot even pay the rent or anything?
Well, fortunately, actually no.
No, never. Okay.
But I guess it was the initial stage. My business is not a complicated one. I share how to invest, and people will decide whether they believe that I can do that, and they will actually pay to actually
Correct.
attend the courses. The initial part was difficult because no one will believe you initially, but once a few batches of students come, the word of mouth become very powerful when the students start to make money. So they actually ask their friends to join, and there was the portion, and I agree on the part about selling. And I know I can tell you initially when I think of the word selling, it sounds almost like an insult, like wow, I have to do selling, Really, I just want to be honest about that. And because it sounds like when you think about salespeople, you don't always have the nicest picture. But I realize selling is not like what I imagine. I don't know what you imagine about selling. But selling is really transferring of your belief and passion. When you believe in something so strongly, you just want to share with people that this is what it is, and you should really like give it a taste and things like that. And it must come from the heart. And once you share, I believe that once you are able to sell something that you truly believe in, it's no longer selling, it's just sharing your ideas. And that helps a lot. Right.
I see.
And that's what you're doing.
Yeah, okay. Like for me, right? Okay, it's like I'm good at maths, but I don't really like maths. Since young, I've been scoring A's at maths, right? But I don't really like maths. I don't really like maths itself, right?
Okay.
Same thing for selling, right? I realized that I can sell, but actually I don't really like selling, right? Which is why I developed systems, like I call it the Apollo method, where I can sell without selling. Whereas like when I sell, right, instead of selling someone, just like selling, what I do is I do a consultation instead, which means the way I sell, right, is I sell like a doctor. Imagine I'm a doctor, right? So you come to me saying that you have some symptoms and maybe you got flu or whatever, right?
Okay.
So I look at your symptoms and I say, oh, you need 10 Panadols.
Okay.
You need to eat 10 Panadols every day, right?
Right.
So as a patient, right, the person won't be thinking, well, doctor, I don't need to eat 10 Panadols. You're selling me 10 Panadols. To me is, oh, you need it. You need it. You need it, yeah. So I don't have to tell them what is Panadol. I don't need to tell them why Panadol is so good, what is the chemical and all that. I just say, you got cough or not? You got cough, right? Okay, eat this 10 Panadol. So
obviously it's not a doctor.
I've changed.
People don't eat Panadol.
So yeah, anyway. So I've changed the way, and I realized that's what works best for me. And I've taught quite a number of my members that, and it works very well for them as well.
Very interesting.
Means they sell like a consultant, or they sell like a doctor. I think the doctors are the best salespeople because they
no
do.
wonder.
So
One of my partners is a doctor, and wow, he's
very good at sales.
He's very good at. I mean, people actually buy from him a lot.
So like my sales strategy is just building a strong brand, such that you're trusted authority.
Yes.
And even if you quote them 5,000 a month,
Right.
For example, right now when I sell social media marketing packages, I tell them social media marketing is a need. It's not a want. Everyone needs social media.
Yep.
If you don't have social media, if your business doesn't have social media, you're quite screwed. It's like you don't have a doorway on online. You don't have an online presence at all. And social media is not just a marketing tool. It's a relationship, right? So it's a need. The only thing is, do you want to do it yourself or you want to hire someone else to do it for you?
That's true.
Right? So I just tell them, you want to do it yourself or you want to hire someone else to do it? There's no other option. You need social media. It's something like an assumption clause also. Maybe that business don't really need social media or what. But social media truly is a need, for any.
I think I can't think of any company that doesn't really need social media.
Like what Gary Vaynerchuk says, every business, right, is first a media company, then their company. So let's say you own a dental business, first a media business, then a dental business. If you own a florist shop, first a media business, then a florist business. Cool. So anything. What are the eight things about investing, the checklist or
The 8 things about investing.
no, there's a checklist, right?
Oh yeah, we
where
have a
you-
checklist. Okay, I just do. I
just
just
quick
make
one,
it very
yeah.
very simple for everybody.
Yeah.
The key thing is track records. Now, there are 2 portions of our business. The first one is the past. We want to check the past to see whether they have been doing well in the past. So we look at the profits to see whether have they been making profits consistently, whether they are able to bring in cash consistently, whether they have been having huge debts, and also efficiency. So these are the 4 key checklists we check from the past. But past is what has already happened. You can see the numbers because they already make the money. That's why you see the profits.
Okay.
We also want to see in the future. That's where I talk about whether do they have an economic moat,
Okay.
and whether do they have any risk involved. So we look at moat and we look at risk. Moat meaning you say, why do we believe they can be around for the next 5 to 10 years? And we also identify the risk and see how strong they are. So risk, one particular risk, right, that we really are very, maybe I just share with you 2 of them, which I think is easier to understand. One is really inflation risk, meaning to say, can this company raise price? There are some companies struggle to raise price because there's nothing special about their products. If I raise price, I lose my customers.
Okay.
I think one example is maybe
Commodities.
telecoms.
Yeah. Telecoms.
Yeah, commodities.
Commodities.
Exactly.
Yeah.
Commodities, because everything is similar, we'll go for the cheapest one.
Correct.
If you're investing in that kind of companies, right, you're going to struggle. Just like if you're in that kind of company business, right, you're going to struggle. The next one is key people risk. Like what Alaric mentioned, right? If you take yourself out of the business, can they continue to run? We want to buy businesses where you can take anyone out and they can continue. So
do you think your business without you around can still run?
Definitely.
Definitely.
I can share with you, I've not been working for quite
and that's a good thing, you know, like
yep.
a lot of entrepreneurs have a lot of ego, right? As to, oh, this is my business and I want it to be dependent on me.
Yep.
But that's the wrong, like every business that I do, right, I start, right, thinking, how can I build this business, right, that even without me around, right, the
Yep.
business can still thrive. Not survive, but thrive.
Exactly.
Yeah.
Exactly.
Yeah.
I
So
guess
key
it's
people,
also key people. I think you must have the trust enough.
And I always think of the exit
build
plan,
team.
right, even before I go into the business.
Okay.
Yeah, so like JT Fox, because I learned from JT Fox, right?
Yes.
So he does this thing like he does a 1-page blueprint, right? So you within 1 year you exit from the company already. Either you know, like you automate the business or you sell off the company within 1 year. So
Right.
the first 30 days you set up the company. Next 90 days you plug the holes in the system. Whatever needs to improve, you improve. Then next 90 days you scale the business. Then after that you exit the business. Exit
This is
means
interesting.
either you automate or you Then that's how you own 50 over companies.
This is interesting.
Yeah.
So maybe I just share one more perspective. I think it's very interesting. So there's active income where you build
Yeah.
the business.
Correct.
You turn it into passive income when you turn it into investment instead of a business. I guess I'm somewhere in between now, and I call it not passive income but passion income. Things that you actually enjoy doing, and
Yeah.
I mean there's always ups and downs in the business, but
Correct,
generally if you love it, it's okay as well.
Mm-mm.
Yeah. But I haven't think of an exit plan.
You haven't think of exit?
Even if I do, I cannot announce it here. Later
Yeah,
my
yeah.
team members will come and
Of
kill
course,
me.
of course.
But for now, I promise them that I'll be around for the next 10 years at least.
Yeah. Okay, I mean, if you're passionate about what you do,
Yeah,
that's
that's
fine. But if you're okay,
But I agree,
it
I
depends. There are many ways. There's one destination, many ways to go there, right?
Yes.
You from Bedok to Jurong, you can take so many ways you can go by.
That's
So
right,
many
that's right,
different
that's
routes that you can go. You can build an empire by building an empire of lifestyle businesses. Let's
Right.
say Virgin brand, right? Richard Branson, right?
Right.
So he has Virgin Mobile, Virgin Atlantic, Virgin so many things, right?
Virgin Active, yeah.
Virgin Active, right? Or you can build a business from one thing like Microsoft or Apple.
That's
You get what I
true,
mean? So
that's true.
there are many ways to achieve success.
Right.
It's just which way is the best for you, or what are you good at? What do you enjoy?
Yep.
What does the world need, and what does the world need, and what
Yeah.
makes money?
Yeah.
These 4 things has
Yeah,
to,
yeah, that's true,
has to
that's
come
true.
into place. Okay, what do you think about the venture capitalist startups phase? Like nowadays, right, a lot of businesses, right,
Right.
they have this business model, right, where the first 2 years they don't make money.
Uh-huh.
Then after that, then they get the only money that they get is from the investors, and then after that, what do you think about that?
What do I think? Okay, personally, I'm not someone who will invest into them. I'm a value investor, so I will not invest into them to make money. But if I believe in the idea, I want to support them. I know that I'm throwing in money with a smaller hope that, I mean, I'm not throwing money in there to really want to make big money of it, but more of like supporting them. Because again, I think every entrepreneur, like we mentioned just now, right? Out of
Yeah.
10, 9
Yeah.
don't
Yeah.
succeed. But all of them start out with good intention. They have a dream. They have an idea. Or most of them are started with good intention. But they have a really.
But there are also some who pump and dump.
That's true. So I guess most of them, I believe that there's this idea that you'll make money, but most of them are not proven, like what you mentioned. So I rather go for, I mean, if I'm going to put a lot of money inside there, I go for proven track records. That reduces my risk. That's my idea about it.
So normally you invest in like larger companies, like
May not, okay. Large is relative. Example, there's one company that I like a lot. It's called Skechers. They sell shoes.
Skechers.
They are $5 billion company. I don't know whether it's considered big or small. $5 billion. But
big.
It sounds big, right? But compared to Nike is $80 billion. So it is relative. In the shoe business, right? So I see that the industry of the shoe industry or sportswear, right? 80 billion is the market leader. This guy is very small comparatively, but proven. Proven. So my take is this: can Skechers become maybe half of Nike? I don't need it to overtake Nike, but it just increased by, let's say, from 5 billion to 10 billion. I double my money. So it's a kind of perspective. Yep.
Okay.
So proven yet not too big. If it's too big, like example, in my opinion, Coca-Cola. Will I invest into Coca-Cola? Answer is maybe not, because when you place your money into something, right, you're placing in the future growth of it. So when I look at Coca-Cola, I don't think it can really grow that much. How much Coke do you drink per day?
Maybe twice a week.
That is quite good already. But of course, Coke don't have other things. They have other kind of brands. But that's my idea, right?
So okay. But do you think that this whole, like, for example, like some entrepreneurs think that this whole, like, because a lot of there are too many entrepreneurs out there already. Then they want to develop their own app. They say, oh, I'll give it away for free for the first 2 years. They say, oh, how are you gonna make money? Oh, investors' money. Then 2 years later, then they think of how they want to monetize it. They haven't have their plan to monetize. They will think of how they want to monetize after 2 years. So to me, that's like throwing money into, it's like a Bunsen burner, you know. It's like throwing money into a Bunsen burner. Like for me, I have more traditional approach to doing business, where I make money from day one, or you know,
not a cash burn model. Because in business, right, there are a few functions. Product development, where you create something that's useful. Second one is the marketing portion. Now, like he mentioned already, sales is the most important factor.
It's the only thing that puts money in your pocket. Everything else takes money out of your pocket. Manpower takes money out of your pocket. Rented operations takes money out of your pocket.
Utilities,
everything takes money out of your pocket.
To qualify, they are important. They are really important. It's just that you still need a ultimate scale to sell.
The only thing that puts money in your pocket is sales.
So when you invest into a company, same thing. Do they have the sales ability? So I totally agree.
Because why all these kind of companies, like let's say Uber, Grab, they are losing $100 million every year.
Billions.
100 million every year. Billions lah total, but So but they are still worth 2.7 billion, right? For Grab. But why are all these models because
my own thoughts about that.
Okay, to me, how I look at it is a money game altogether, right? Everything is a money game. Bitcoin is a money game. Everything is a money game. So
how do you define money game again?
Anything that involves money, like the passing of money, is a money game.
Okay, sure.
There's a difference between money game and Ponzi, but money game doesn't mean Ponzi, right?
You say that in Malaysia, money game means something else.
Anyway. So like Grab, right? All the investors are buying into Grab, hoping that when Grab IPO, then they cash out their money, correct? But then when they cash out the money, then who loses the, you know, like
I get what
the market will have to absorb, like someone has to take, it's like playing musical chairs, and someone has to absorb it's like Bitcoin. The price rise 17,000, drop until 7,000.
That's right.
So, and that happens for almost every, whether is it forex or
there must be a real demand.
There must be a
real demand. For example, Bitcoin, is there a real demand? Are people really using Bitcoin to purchase things? The answer is yes, but maybe less than 5%. So
the rest are all speculation. So it's a bubble. Is that what you're saying?
What's your thoughts about
the Grab and the
Grab and Uber and Spotify I would say I'll link them together. They are platform businesses, very interesting. A lot of people are using them. Whether you use them on, I mean, I'm a user of Spotify. I'm a user of Grab, Uber. By calculated, they are losing a lot a year. Actually up to billions with the last I saw. And same question. What is the strategy to turn around?
But why has this model started showing up in the system, right? When like you don't see this model in the 1800s, 1900s, right? It only started recently.
It's called a platform model. A platform model looks like this. So there's a platform, and you realize they don't really have their own products. They provide a platform for people to produce things. For example, the producers in Uber are the drivers, and the customers will purchase the product, which is taxi services from the platform. When there's more customers, more drivers will come in. More drivers come in, more customers come in.
Correct.
So this platform, right, they are actually valuated based on the kind of database they have and based on revenue. They still have revenue.
Yeah.
But their expenses is huge and crazy.
But like you look at WhatsApp.
Yep.
WhatsApp was sold for 19 billion to
Yep.
Facebook, right? But
Yep.
WhatsApp didn't have a monetization model at all.
That's right.
Facebook basically bought WhatsApp for $40 per user.
Right.
So like why what happened in the economy, right? That caused this model to start developing. Like now the model, right, is really we pump in money,
Right.
get market share,
Right.
lose money, never mind. Make sure all the competitors lose money more. They close down. Then we got a big market share. Then we think of how we make
This
money.
model is not new. This model is not
yeah.
new. It's been around for very, very long. Just example, LG. LG has been doing this for many, many years. Each of their phone that they sell, right, they are making like I think less than 10 cents.
Okay.
They just want market share. So this idea of like pumping money in to get market share, to get database, is not new at all. Of course, the thing transit from manufacturing to now IT to now platform. Now this changes because of how technology changes. So the interesting thing is, maybe what we should ask is why is Uber worth $1 billion? Why is the most interesting is why is
It's the
Ofo Bike worth $1 billion? And it, according to people, it's the database. But we think about it this way: how did they have an actual valuation, a real valuation? How did that valuation comes about? It comes about, right? Let me share with you. It's through these skills called selling again. Why? Because I was reading the papers about this. Was it Ofo Bike or Obike? I can't remember. But this young chap in China, he is a billionaire because he owns this company called Ofo Bike or Obike. Okay, I can't remember. But what he did was right. He actually sold a portion of his business at a certain valuation. So he tell people, I'm going to sell you 1% of my company at let's say 100 million, or let's say at let's say 100 million. Take 100 million, multiply by 100 because he sell 1%. Multiply by 100. That's how much he's worth. It's quite ridiculous.
Like how can you be a millionaire?
Yeah.
I always share. How can you be a millionaire? Very simple. You open up a company.
Yes,
you sell 1% for $10,000. Straight away you have 990.
Or you sell 0.001 for 10 cents, you know. You go backwards, you become a millionaire with a 10 cent transaction.
So technically, your whole company is valued at $1 million already. Straight away, your net worth, because you own 99% of the company, is already 990,000.
This one is a bit of money game, I feel. so
okay.
So, but the thing is, when you buy something, what are you buying for? When you buy a company, it's for the earnings ability. And apparently, all these companies, they do not show that they have. So you're buying a future hope. And I think it's very risky. Yep.
But you see, okay, after I've done sales for a while and all that,
Right.
after I realised, right, that value, right, is really an idea. It's really about perceived value. Like, what makes Starbucks coffee worth $7, right? Is what makes the price worth $7 is the fact that people are buying it at $7 and there's okay, what determines the price of something? How much someone is willing to buy for and how much someone is willing to sell for. So long as there's at least one person who buy this way, that is the price at that point of time.
That's true.
Makes
That's
sense?
true. That's true.
So what is value? Like is there really what is there intrinsic value? Like what is value, right?
I love this question.
So value is like in value investing. What is value, right?
Yes.
So if you really look deep down, right, value means like what I value means what I treasure, what I want, what I
what's
love.
important to you.
So actually the essence of value, right, is love. The essence of value, right, is how much someone loves something that they can, like, I love $7 more than I love a cup of coffee more than $7. That's why I exchange.
I've never thought of it this way. Very interesting.
So the highest level of value, right, is love. That's why Jack Ma, right, talk about love quotient, which means there's IQ, EQ, FQ, correct? Financial quotient, right? And there's love quotient, LQ. And he said that businesses, right, that can when you can sell love, right, you basically dominate the whole market, right? Because right now, okay, everything's like there's so many reviews, like everything is becoming so connected, the whole economy, right? So the company that can love better, either is it through customer service or through a better product, the company that can love better or can make something that people love more, right? Those are the companies that succeed. And love, right, is something that is very duplicable, which means it doesn't cost money to manufacture love. Whereas like I manufacture a cup of coffee, there's a cost price. So I think that the next, like, okay, when there's robots and all that, right? AI, what I strongly believe, right, is that the best thing to sell, right, will be love. That's why if you realize right now the whole economy, right, shifting towards like meditation, self-actualization and all that, right? Because people are becoming richer and richer. So as their human needs of like security and stability are all settled, right? They move towards self-actualization freedom. That's why you see personal development seminars that talk about self-actualization, or like meditation apps. All these, right, are becoming very, very very popular.
Okay.
So the next best business to sell is love.
I hope you all get what he's saying, because it sounds a bit wrong, selling love. Okay, but
Yeah.
but basically it's almost turning into a sermon, which is very good,
Yeah,
because
yeah.
it's the essence of what we all do. Yeah, correct.
Yeah. Cool. So any
Mhm.
any last words, or ask them a question that they can reply in the comments or something.
Oh, okay. So I guess right, to sell love, you have to have love in that sense. So I guess the key question is what do you love? Because only when you're very sure about what you love, you can express the love through that.
No, like for
form.
example, he
Yeah.
has a love for investing, right? And he can project the same love to someone such that they find it's of value.
Yeah, something to that, and just to add a bit of that, right? Because I don't really love investing for investing, but I love the freedom that investing can give me. I love the passiveness, and because of that, I want to actually give others a way to actually do that. So again, think about what do you love and what are the forms that you can deliver. It's an excellent idea. Sell love.
Like self-actualization, like self-freedom, self-love. I think these are the things that will really, this kind of stuff.
Let's go and check whether love.com is. I'm sure it's taken.
It's
Right.
definitely taken. Maybe you can share your social media handles, like what's your YouTube and Instagram and Facebook, or your website that you can. Like if any of you want to learn value investing, how you can contact Sean.
I think the best way is type Value Investing College, and probably you will see quite a lot of landing pages from my marketers. but there's how you can look for me, or just Sean Seah, SeanSeah.
Awesome. Cool. So thank you so much for this video, and I'm sure all of you have received a lot of value.
I learned a lot from
I learned a lot from him about value investing and like how to evaluate a business and everything. So thank you so much.
Thank you.